Hi there, and welcome back to the Money Effect, where I bring you all news, money and finance related. This is just for educational purposes and not investment advice. If you like the content, please like and subscribe. And now that's out the way, let's go. So last week, on my last video last week, I said this week's going to be a big week for the big tech companies, the FANG companies as they're called. You've got Apple, the Microsofts, the Alphabet, the Amazons, and Facebook, now known as Meta, and Alphabet is Google. Just to clarify that, and yeah, it was a big week, and let's look at the main headline: brutal week as 800 billion is wiped off valuation. So, in a brief overview, we know that there's a lot of reasons. We know interest rates are going up. Now, when interest rates go up, these big growth companies, they have to borrow more money at more expensive rates, that they used to invest. Also, the way they're valued. Now, again, a bit more methodology, technical stuff. The way they're valued now, when interest rates goes higher, means they'll be valued less. Obviously, Amazon, what wasn't in the 2000s, is now dominating the world. Facebook's and Instagram, Facebook owns Instagram. Apple, everyone's got Apple phone. Nobody, I don't know, is BlackBerry still in existence? I mean, BlackBerry is still in existence. Nokia, but we know how dominant these companies have come over the last become over the last 2 decades. Great growth, and now it's getting to the point where these companies are kind of falling off as per se, and as we go with, if adding to the fact of that continued macroeconomic environment that we have right now in terms of high inflation, supply issues, with what's going on in Taiwan. A lot of these companies use semiconductors, and obviously potentially go into a recession. I haven't bought an Apple phone um, in a long time, but I can only imagine how much it costs now. And is that now what people is that the priority for people? Most people around the world, and we're going to get onto this in also companies themselves are trying to save money. So you know their earnings this week is a big indication of what's going on with the company going forward. So let's just kick it off. Like you said, here's the headline. You can see it: 800 billion basically wiped off in the week. Now we did have a nice rebound on Friday, but we'll get into that. So I guess let's start with the good. We're gonna start with the good, and then we're gonna look at the big five companies, and then we're gonna go to we won't touch on Twitter. Twitter got bought by Elon Musk finally. Obviously now they're a private company, so we won't touch on Twitter, but we will. We're going to talk about the top five companies, and we're going to start from the good to the bad. And so the first company we'll look at, um, we'll see here. Here's Apple. First company, Apple. Apple earnings beat as they get good Mac sales and their slight miss on iPhone. So, Apple. So if we look at Apple's earnings, the estimated earnings per share was, and again, technical terms, but let's just keep it simple. Their earnings per share estimated to be 1.27. They actually hit it at 1.29. Their revenue, not so technical, we know what it is. Revenue for the quarter was 90.15 billion, estimated to be 88.959 billion. So they actually exceeded expectations. And when you exceed expectations, that tends to mean that the stock price goes up. But Apple initially, and like I said, we've had a nice little rally to close off the play on Friday. Apple, when the earnings came out, fell. What's going on with Apple? So the main thing why the Apple stock fell is because although their earnings beat, they forecast in future slowdown in iPhone sales. Now, again, the iPhone 14, I believe, just launched. I'm not one that, like I said, I'm not too familiar with Apple products. I don't use them myself, but obviously, just in general, these things are expensive. People are going to be buying less of them, and that's basically what Apple is saying, that going forward in the fourth quarter next year, they expect iPhone sales to slow down. So that was really why the company, the share price went down initially, and also services they expected to sell. Otherwise, it was an excellent quarter for Apple. All their products are growing still. Like I said, they're beating revenue, beating earnings per share. So definitely a solid company, and Apple have great great cash. They're not going to go bankrupt tomorrow. They've got a lot of money in the bank, a lot of money to still invest, and they're gaining market shares in emerging countries. Obviously, they still have supply issues. A lot of their chips are made in Taiwan, and obviously, if in terms of the political environment, what's going on there, China and America are kind of in a standoff now with what's happening in Russia. Um, we don't want to now see China invade Taiwan, because that will literally start off World War Three. If Russia and Ukraine ain't going to do it, that literally will. And obviously, America has in their policy to defend Taiwan. That's like a mandate if they ever get attacked. And Taiwan is close to China, so China believe that Taiwan is basically in essence part of their country, so they really want to dominate it. And we just had the leader of China; he got a third term unprecedented, so he has complete power now. So let's see what he does. Obviously, with what's going on in Russia and Ukraine, potentially he's gonna pause, because it's not just that easy to invade a country as we're seeing. But if that was to happen, huge ramifications, and so there's still those issues. But Apple, great, they're doing great. They're doing great, and like I said, like if you just see the share price, it was a slight drop. But on Friday when we had, and I'll explain on Friday why we had an increase. But on Friday when we had that big rally, they popped. So again, Apple, if you want a stable company, a stable big tech company, probably Apple is the best at the moment. Going forward, they're gonna be affected by a recession, and that's what they've said they would be, with low sales, and they've forecasted that in. So we'll see what's going on for the future with them. The next big company is Microsoft. Again, not bad, not too bad. They didn't do too bad. So again, the stock fell, but more so because of the PC demand and the stronger dollar. Obviously, when a dollar is stronger, it makes your products more expensive. Um, if we look at Microsoft again, the earnings per share beat 2.35, expected 2.32. Their revenue was at 50.1 billion, estimated to 49.86 billion. So again, they beat analyst expectations. So, and if you look at the last 5 days, there was a sharp drop initially, which I'm going to explain, and then we did have this rally on close of play on Friday. So Microsoft again is looking like these are big companies. So we know a lot of these small growth companies I've been talking about, but these are big tech companies. These companies, unless something catastrophic happens, something really serious happens, they're not going anywhere. And Microsoft again is another company that's sitting on a lot of cash. But the main issue with Microsoft is twofold. One, it's a cyclical business. So PC demand, they're forecasting PC demand to slow down next year. We're going into a recession. Now, whether we're in a recession or not is up for debate, but definitely next year, there's definitely going to be a recession. And that's part of the Friday rally, because we're expecting next week the Federal Reserve is going to talk, which I will summarize that. But again, cyclical business, they beat expectations, but cyclical business, and they're, the actual electronic sales are down and forecast to be down. The main reason why this company did fall is because of their cloud weakness. Now, cloud, if you're not familiar with cloud, just Google it. But in a sense, everybody has a cloud, where you store your photos. You don't put them on your phone, you store them in the cloud, i.e. somewhere else. Let's put it that way, simple. But that's what Microsoft, and Microsoft Azure, that's a big part of their business. And now they're seeing cloud weakness. Why are they seeing that? Because customers, as we head into this recession, businesses are saying, where can we cut money? IT is an essential backbone, and IT will always be there. But at the same time, companies are going to say, well, maybe we just pay less for Microsoft services. One of the biggest services is their cloud business. And they're starting to see that kind of weakness in their Microsoft Azure. You can Google that. And that's really why the Microsoft stock fell. And probably likely going forward, we're going to see the stocks going down, because as we head into this recession, a lot of customers are going to stop stop buying the Microsoft products in any shape, way, or form. But again, it's a solid company, and if you believe Microsoft will be here for the future, as it gets less expensive, you know, if we look at the price chart, it's slowly coming down, but it's been in a long upward trend for what, I mean, how many years? So as it keeps on going down, definitely a good company. Now, third company we're going to talk about is Google, aka Apple, and here, um, not disastrous. So they did miss earnings. They did miss earnings quite big on the earnings per share, and they revenue was slightly down, and they the stock fell, and it's like again like the others, it's recovered on Friday, but the stock fell massively, and here is now when we're going to start getting into the bad of the tech companies, and this was actually, I believed, Alphabet's slowest growth since 2013. So that says a lot, apart from the pandemic when everything fell off. Decent cloud growth. One good thing about the company is they're buying back stock, so that's why the stock price didn't, tank. Only went down about 5% initially, so they're always buying back stock. They've got a lot of money, Alphabet. Um, their search and YouTube is resilient. Everybody uses YouTube. There's not really any other option to YouTube, as far as I'm aware. Everyone uses YouTube in terms of searching. Most people use Google. I know you've got Microsoft Bing and these other ones, but they're not really ever had any traction. So that's the resilient part of the business. Now, the negative is, again, advertising. People advertise on Alphabet. People come here, they pay for advertising, these big companies. And again, as we head into this recession, companies are going to spend less. And that's what Alphabet is forecasting, that these companies are going to spend less. And that's why the share price is going down. And they're highly exposed to the economic behavior. So likely we're going to see Alphabet go lower. When the market starts booming again and the economy starts booming again in 2, 3, 5, whatever years, this company is not going anywhere, and it's going to be an amazing investment. But for now, as we head into the recession, it's going to be highly affected, less so than a Microsoft and an Apple, because backbone of their businesses, people are still going to need. But when you're cutting costs, those marketing expenses is going to be the first place. You're going to cut marketing, then you're going to cut IT, because you need IT to essentially still run the business. So obviously the marketing and the revenue advertising is going to be the first thing down. And they're kind of the first company as well now that has actually said they're still hiring, but they're going to reduce the pace of hiring. They're going to start looking at cutting costs. They're going to start focusing on operating costs and how they're running the business. So again, they're looking at things are getting expensive. So not too bad, but not too great. And then we go to the next company that reported, Amazon, and here's where it's now starting to get bad. So Amazon sunk. They just missed everything. So Amazon sinks 13% on fourth quarter weakness. Earning per share actually beat, and their revenue was slightly down, but the stock in it. Well, again, everything on Friday's come back, but the stock tanked. Now, why did Amazon tank like that? Because Amazon is unlike all the other ones. Amazon is very cyclical nature, and when I mean cyclical, it's dependent on how the economy is performing because of the way. Obviously the goods and products they sell. If people haven't got money, they're not going to be buying Amazon. I think they did two prime days this year, and it still wasn't that good. So we'll start with the backbone, the cloud business. Again, Amazon is the biggest cloud provider, AWS. That's their cloud business. They store everything in the cloud, and that's where a lot of these companies have been moving to save money. And now the cloud is probably for the first time ever uh, not grown. And as companies are reducing their spending, that's not good. The main reason Amazon tanked was they said the outlook for the fourth quarter and going forward is going to be very negative. So they're saying there's going to be a recession and it's going to really affect them. Now sometimes that can be good, because if the numbers do come bad out in the next quarter and next year, then it's already been factored into the share price, and the share price might go high. But if they come lower than the bad, then it's going to be terrible. But they know the nature of their business, and they're saying, listen, going forward things are going to be rough. They don't want to say going forward things are going to be good and then things turn out rough and then it just tanks even more. They're getting everybody prepared right now, and that's why the stock is falling. But Amazon, again, is a global company now. They've got a new CEO. He's going around cutting costs of the company, which is a good thing. So they're going to be more leaner company going forward. And again, they're going to be around. These Amazon is not going anywhere. Is it going to be growing at the rate it's been growing? When it went from this to this? No, probably more than likely not. Is it going to fall more? Probably yes. But Amazon is not going to go anywhere. And one day the economies and the world's things are cycle in nature. We'll get back to normal, and Amazon will be a great company still to invest in. But for right now, they're predicting tougher times ahead. So I wouldn't invest in them. Again, it's up to you to invest. You'll make your own decisions. But that's what's going on with Amazon right now. They're saying, listen, going forward, we're predicting things are going to be bad, and they're cutting costs. And then the last big tech company, which was the worst, is Meta, i.e. Facebook, formerly known as Facebook. And this just plunged to its lowest level since 2006. This just keeps plunging. And it's really just, it's if you see the earnings per share they missed, and revenues wasn't too bad, but what affected Meta the most is Meta, they believe in this metaverse, this whole virtual reality. They believe that when we're working from home, we're going to be in a position in a few years that you're working from home, and it's going to be like you can put your headset on and you're basically going to be like you're in an office. For someone like me, I don't even like turning my camera on when I'm at home, so it's probably not the greatest idea. But that's what they believe, that we're all going to be at home. One example is we're all going to be at home. You can put a headset on and it's going to feel like you're actually in an office meeting. I mean, if that we don't technology moves, who would have thought we would have had the internet? Who would have thought we would have had phones? So conceivably, in 5 to 10 years, yeah, that could be the reality of the world we live in. But that's what they're investing in, and they're just losing money. So over the last 3 quarters, they've lost 9 billion in this metaverse project, and investors are just not believing them. Now, like I said, if you're somebody that believes in the metaverse and believes in this whole virtual reality, then this is the company you want to own, because that's where they're going. They're going all out. Mark Zuckerberg, he owns this company. He runs all the decisions. That's what he believes in, and that's what he's going for. And you can see so far it's not going well. We've gone from nearly 400 to now 100, and potentially still going to get lower, because this metaverse thing is not going to pay off next year or 1, 2. It's something that 5, 10 years. If you believe in the metaverse, then this is a great company to own. Obviously, beyond that, TikTok. If you're somebody that's on Instagram or TikTok, you'll be able to. Which one is better? TikTok is growing. So many people moving to TikTok. So how much more can Instagram grow? If people rarely use a Facebook now, no more now. So how much can their core business grow? This is a company that since their high has lost 722 billion in market cap. How much can Instagram grow, or WhatsApp grow, or Facebook grow now, especially when you've got TikTok, and maybe there'll be something coming along. And if the metaverse is not paying off, this is why investors are dumping the stock. And again, costs are rising, and this is one company that's saying they're definitely not hiring people. So again, they're predicting a recession next year, low advertising. So I mean, it's not definitely, this is the worst of all the tech companies, not looking good. If you're a big fan of the metaverse, go research it. If you're something that thinks going to go on in the future, this is the company you want to own. But at the moment, it's just not looking good for them, and that's reflected in the share price. And I don't even think they didn't even have, like, everybody had that big a little rally on Friday. They didn't even have it. And where next week we've got the Federal Reserve meeting, we're going to see what did the Federal Reserve do. Are they going to start saying, okay, people are factoring a hard recession next year? Consumers are suffering, businesses are suffering. Do we start raise hikes one more time and say that's it? Do we not raise hikes to the fullest, or do they just keep going? If they keep going, it's going to be a painful year next year. So let's just get into crypto quickly. So just a bit on crypto, see what's going on, and Bitcoin and crypto has been doing well. So there was a point where I've been talking about decoupling, that crypto needs to. Well, it's been doing really well. So crypto needs to get away from crypto needs to get away from techs because it's been moving the way tech stocks has been moving, and everybody's thinking Bitcoin is going to go to 10,000. And normally, whenever everybody thinks it's going to go lower, it tends to actually go higher. And it's been resilient, Like we just seen how volatile the tech earnings have been this week. Like you saw from the first article, 800 billion was wiped off at one point. But yet Bitcoin is up. It's up. See, it's up on the week. Ethereum is doing really well. And it's gaining momentum, man. This cryptocurrency for me is here to stay. It's gaining momentum. If we look at the Bitcoin chart, it's been doing really well. It's decoupling from tech, and that's what I like to see. It's not moving how tech's moving now. It's moving in its own direction, and that to me is just a positive sign, a really good sign. Now, are we still going to get We're still in a bear market for crypto. Understandably, this is still a big bear market for crypto. But I would like to point out this article. 50% of institution investors. Now, an institutional investor is a big company. A big company would be in the UK a Barclays, a Lloyd, a Fidelity, a BlackRock, big institutions. And they're buying crypto. So they're buying it. They're looking at crypto and thinking this is a product that's going to be around for a long time. And when I say crypto, there's different cryptocurrencies, but the proxy is Bitcoin. If Bitcoin is up, everything is more than likely going to be up. When Bitcoin is down, that means everything's going to go down. Obviously, Ethereum again is proven itself to be a real world. It's got real world use. Whether the real world use is actually useful, that's another debate. But NFTs, DeFi, and finance, that's real world uses for Ethereum. And people are predicting Ethereum will one day go to 10,000, 20,000. So if it's at 1,600 now, and one day in like 5 years, it's going to go to 10,000 or 20,000 in the next bull run. Now, when would that happen? But institutions, they're buying. The retails are not buying. And to go to those massive highs that we saw before, you're going to need retail investors, quite frankly. But the institutions tend to do their research first, and then the retail just jump on the bandwagon later. So it's a good sign that these big companies are trying to buy this crypto and holding it. And again, we're seeing UK lawmakers recognizing crypto as a financial instrument. Some people are going to be against that because they don't want it to be regulated because it's meant to be made by the people for the people. But at the same time, when you have a regulated thing, it stops frauds. It stops these Ponzi schemes. People have confidence. A lot of people have lost money in crypto in this bear market. If you go look at Celsius, invest in Celsius will give you 20%, 30% interest rate. And you're thinking, well, the bank's giving me 0.5. Obviously, it's a no-brainer. But these companies have just turned out to be fraudulent. And when you have regulators coming in now, you might not get that 20 to 30%. You might only get the 5%, but it's still better than what the bank is giving you. And it's going to be regulated. So you at least know that company has the capital. If something happens to your funds, there's some kind of recourse. And that's what's going on right now. These regulators have noticed and said, what, crypto is going to be here to stay. How can we work with it? And that's what we want to hear. And that's what's going on in the industry right now. And crypto just keeps on marching slowly. And like I said, this is the time to do your research in crypto, get your knowledge up, because when people are not talking, that's the time to invest. That's the time to buy. When people start talking and a taxi man tells you about crypto, that's generally the time to sell. And that's literally what's going on right now. Nobody's talking about crypto. It's going under the radar. I'm talking about it. I'm investing in it. I'm going to keep investing in it. If it one day go in 5 years, if it goes to new all-time highs and well, I'll be laughing. If it doesn't, then it is what it is. But I'd rather have invested and that now than when it's at the top and when Bitcoin was at 80,000. Because if you're somebody that said, oh well, everybody was talking about Bitcoin when it was, up here, well, obviously you've lost a lot of money, haven't you? But if you're somebody, and the cycle repeats itself, nobody was talking about Bitcoin here. We had this big thing in 2017. Everybody was hyped. Then it fell off. And then we had a couple of years of nothing. Now, if you in these couple of years was just patiently waiting, doing your research, investing slowly, then you've now gained when it went up to here. But again, most people just waited till it went up to here and started buying. Probably got lucky here, started buying here. It's gone down. So now, if you look at this, we probably, listen, I think crypto, it could go lower, could go higher. I definitely wouldn't. I know the only advice I can ever give is I wouldn't go all in on anything, but it's up to you how you want to play it. But I feel like crypto one day is going to reach all-time highs, and I don't know when it's going to be. But I mean, I'd rather take the gamble when prices are lower than when they're higher. So that's the money effect. Thank you for listening. Yeah, like and subscribe and go back to the videos. Peace.